Okay, so we have a new episode of Legends and Leaders, and today it's great to have Ross here. You're the president and CEO of Gerber Kawasaki. You've built up a really impressive wealth management fund. You've been commentator on so many different interesting issues, whether it's climate, energy, cannabis, etc. So I'm excited to have you here and to kind of get into your story.
Great. Thanks for having me.
Awesome. So when you were growing up, did you think you would get into this investment management kind of business? Like, how did this kind of start initially? Your aspirations to be in business and leadership?
Well, it was definitely not my goal growing up. I wasn't a kid who was like a 10-year-old playing with, I don't know, financial tools or something. I'm a guitar player, so, I only do stocks because that was what I was good at. Like I had no desire. So when I was a kid, my parents, I worked as a waiter and I delivered pizzas was my first job, and I would make this money, and my mom's like, you should invest it. And I would buy Disney stock thanks to my mom. And so, she was like, here's how you follow stocks. And my grandfather was retired and he lived on dividends. And so I was like, my grandfather has a pretty good life. My dad works really hard. It would be probably really great if I could figure out this stock market thing. So when I was 16, I was going through this period of time, I wanted to become financially independent. So I was like, I want to learn about money so I don't have to rely on my parents. I had a good childhood, actually. I was just tweeting about, Elon's very difficult childhood versus mine, which was literally opposite of Elon's. So I had a good childhood, but I wanted to be independent. I wanted to move to the East Coast and go to college. I went to UPenn, and I wanted to understand money so that I wouldn't have to ask my parents for money or like need anybody for money. Like I love that idea. And so I learned about stocks and whatever, but I played music. So the idea was this was how I would support playing music, because when you play blues and jazz, it's not like pop. And so I never expected to make a lot of money playing music. And so it was just like, you know, if I can make money in the stock market, I can pursue what I really love, which is music, which I'm still pursuing today in various forms, thanks to the stock market. So I was right about that. But what happened was in 1994, when I was starting in the industry, I was starting in the entertainment industry. So I was hired by Disney out of college, and I was going to work at Hollywood Records, which is their record label. And then things weren't going well there, and nothing was happening. And I worked at several other entertainment companies, and I sort of had these weird experiences. You would call them like Me Too type experiences. Hollywood's a weird place to work. So when I was 23, I was like, this is not for me. Like I was just like, this is not for me. And what was happening in music was everything was going digital. And so like this analog to digital transition made me think there was this massive opportunity. And then AOL came out and the internet, and I was like, dude, this is the coolest thing ever. Like you can log on the internet. So I got a computer when I think I was 13. I got an Apple II, and I begged my parents. I said it would be like super productive, and then I got Castle Wolfenstein, which was one of the first video games, and I was like, I love this. And then I got on what was called bulletin board systems, which was the first internet. So when AOL came out, I was like, email, this is big. And so I found a firm called Sun America, and they had a training program. I had to get licensed and trained. I decided I wanted to invest in technology. This was 1994. I was good at explaining to people why you want to invest in technology. So I was able to build a client base as a 23-year-old on my own with no help. Not easy. No salary. I've never had a salary in my life. And I went out and sold mutual funds to people, growth, tech, mutual funds. Well, that turned out to be a really great time to start in the investment business, because from 95 to 2000 was the greatest period of time in the stock market history in my life. And, I made fortunately millions of dollars by the time I was 30, and like built, my career substantially. So by the time I was 28, I was overseeing about 250 investment professionals, and managing the entire company that I was working for. And it was one of the biggest distributors of mutual funds for Sun America and retirement products. A guy named Eli Broad was the president of Sun America, and he was a just genius billionaire. And I was really lucky to learn from this guy Eli and this guy Jay Wintraub that ran Sun America, and they were just like super competent, and we just grew like crazy. And then AIG acquired Sun America, and that was a really good day. those were the days where I thought I was real rich. I was like 27, 28, and like, what, this is like the best time ever. And then I knew it was like too good, and then it ended. you know, I was just recently talking about 2000 to 2003, which was a brutal 3-year correction. It was like, and I suffered through that for 3 years. Um, but we survived and did not bust, and that makes me probably a better financial advisor today. Seeing the boom and busts now several times. So that was really how I got into it. Was I really find technology fascinating, and like I love new things, and even at my age today, like my curiosity for new technologies, new things is just as big as ever, like, so as an investor, it's really important to be adaptable, and the world has changed, dramatically every decade. And so that's the fun thing.
How did you develop your management techniques? I mean, at Sun America, I think you were overseeing 15 branches and 200
Right.
different advisors, and you've scaled that up with Gerber Kawasaki. Like, how did you scale your management techniques and learn how to apply them there and build better on that now?
Well, truthfully, lots of mistakes and pain. I started managing people at 25 in this program, and I wasn't a natural manager. I'm a natural sales guy. Like, I'm good at selling stuff. I could sell anything. Um, so managing people, I was like a top producer. Like, I was the top guy in the office. I was the top guy in the company. So when I was 24, I was the top guy in the whole company. And nobody could believe it because I'd only been there 2 years. But the standards were very low there. It was not like, and I came from this world where I was like, my standards were really high. So I was like, that's good. So that was the nice thing. It was easy comp. So I moved right to the top. But then they're like, okay, now you're going to oversee 35 people. And I'll never forget, I was 27 when they put me in charge of an office. So I was a branch manager, and there was 35 people there when I got there, and I was the youngest guy. So you can only imagine how that went. So back then, the way we managed business is extremely different than today. Okay. So think more like Glengarry Glen Ross or Boiler Room. Okay.
Right.
So Ben Affleck was kind of like me. Like, there's scenes in, like, when the hiring scene, like, I don't know if you've seen Boiler Room, but like, he literally stole my lines, like, so back then it was like cutthroat. We sold mutual funds. Everything we did was ethical, but it was a sales business. We sold mutual funds and retirement accounts. It was just commission based, and that's the way it was. And there was no advisory, and none of that existed. And we would make a commission. So sales training and motivating wasn't that hard for me, but managing people was hard for me. And through many years of mistakes and learning and firing, unfortunately, more people than I care to admit I've had to get rid of over my career at that company in particular. And then we hit the financial crisis, and I had to shut down like whole offices.
Mm.
Oh boy, over that decade, I learned, a ton. And then when I started Gerber Kawasaki, I partnered with Danilo Kawasaki, who was one of my top managers at my old company. And by then, I had a pretty good grasp of corporate, overseeing a big company, as well as small group and management and sales training. And Danilo was one of the best managers I had, and was a great trainer and had a great team. So we started GK with that core team of some of my corporate team, and then his branch. And that was like, I bought us out of my old company. And then we started our new company, Gerber Kawasaki, in 2010, post financial crisis, because we figured now is the time, the brands are dead, and we can, really like start a new company and new brand. But managing people is extremely difficult because you really have to understand people and what motivates them. And then you have to understand like the dynamics that drive like who they are. A lot of it is psychological. I spend a lot of time on psychology, like why we are who we are and what ultimately drives us. And that mostly stems back to your childhood and your parents. And so, over the years, I've developed as a manager, and, I have a much smaller company now, 45 people, but no less complex, because millennials are the toughest group to manage in the history of management. Actually, Gen Y is way easier. It's just the millennials.
Huh.
The people your age, like the people in in the 20s, they're great. Totally different generation. But the millennials, man, managing millennials when you're a Gen Xer is like deep breath every day, you know. But I've had to adapt, dramatically from the way I used to manage business, 20 years ago to today. And that's part of it. I might write a
So
book,
how,
like managing millennials. I might write a book.
yeah, I think it's important to kind of teach people how to do it. It
Oh,
seems like
brutal.
it's yeah. So you've been so known, Ross, for Tesla and for your
Right.
what your position in Tesla, what you've been thinking about Tesla. How did you kind of get interested in Tesla initially, and what do you think is the future for it, and specifically in the clean energy space, because you're passionate about that?
Well, at the time that we invested in Tesla, originally it was like 2013, 14. Um, I was lucky. My stepfather was the chancellor of UCLA, and he worked for the Department of Energy. And so he's involved with nuclear, NASA, and climate. So he was tasked with from Congress to put together like leading academics and scientists and everybody to do this massive thing on climate. And this was like 20 years ago. Okay.
Hmm.
So I go to this UCLA event where he presented the findings from climate. And I'll never forget this because it was super boring. It's like all data, all engineers, all academics. And they were basically like, in 30 years, if we don't get started, we have a massive problem. So that's when I sort of realized, like, you know, okay, like we can't just pretend this isn't real. This is real. And at that time, there were no solutions, like solar and EVs. There was none of that. Um, and so it was really like, how do we reduce our dependence on fossil fuels? How do we do all these things? And then I didn't really think about it too much as an investment theme because it was just like we invested in technology and there wasn't really any of these companies. And then Tesla came out. And the only reason I knew Tesla was the original office was in Santa Monica and it was right near my office. And so they had this
Huh.
little office and the Roadster came out. And I was like, this is a little piece of crap Roadster electric. And I had no interest in it at all. And then they went public and the Model S was being launched. And when they went public, everybody was like, oh, what do you think of Tesla? And I said, well, they haven't sold one car yet. I don't invest in things until they sell one car. But once they sell a car, I'll look at it. So then the Model S went on sale and we went down and looked at the Model S. And I want to pretend like it was this big aha moment. It kind of wasn't. It was more like, this is a great car. It's electric. It drives amazingly well. And if they can make these, which they struggled at the time, boy, this could be a good company. So we bought into Tesla. Um, I think this equivalent price was about $3 split adjust. What is it? I don't know, $300 today or whatever.
Yeah.
So we made 100 times our money. And in the investment world, that's extremely rare. And in real dollars, it was like at least 2 to 300 million in gains for clients and myself, which was great. So, that was the beginning of the ride. And the ride started off really well because it jumped like right off the bat and we made money right off the bat. And probably one of the decisions that I'm super sad about was I had something like 3,500 shares of Tesla back then at $3. Not a big investment. I was like, okay. Well, it wasn't at $3. It would have been way more shares because it was split adjusted. Okay, I take that back. I had 3,500 shares at the time. So I'm going to say it was like, I don't know, it was 15 or $20 at the time. And a bunch of it was options. So when it ran up to like 180. We made a bunch of money and we sold a bunch. It was just like, that was easy money. And then Tesla kind of bounced around for 3 to 5 years and went through that really hard time as they launched models. And then the Model 3 was the big thing. And that was like, I was like, when this thing comes out, it's a game changer. But boy, that was hard. So it turned out it wasn't easy at all. Basically, now that I know Elon better, like everything is painful with Elon and everything's painful with Tesla, but they get it done. And so they got the Model 3 launched and the company grew to now, an $800 billion company. We're still big investors in Tesla. I still think Tesla has many, many good years in front of it. as new products and services are launched. And now, if you look at where the world is today, technology is climate solutions. And so there are many, many companies building these solar battery systems. The entire system of the issues of climate are being addressed. So, that was the goal of Tesla, was really advance sustainable transportation and energy. And I think they've been very successful at that. And now there's lots of investments we can make that will be, I think, really successful over time.
So you mentioned, Ross, that when you identified this Tesla investment early on, you went, you saw the car, you kind of thought, hey, if they can actually make this, so you kind of had an idea as to why you would invest in it. But what's your like typical investment like kind of thesis? Like, how do you determine what is good, what's a good investment? Like, what are some of the things that you look for in a new opportunity, especially one as young as Tesla at the time?
So we're thematic investors. So my main first job is, I believe every decade there are themes that drive innovation in each decade. And it's changed every decade that I've been alive. Whether it was social media, the rise of mobility when cell phones were new. People forget, especially young people, like when a cell phone came out, like that was small and usable. Wow, that was great. And then Blackberries were like the rage. And then the iPhone came. So it was actually the Apple guy before I was the Tesla guy. So when Apple started innovating around mobility, we were in the mobility theme. And boy, that was profitable. We still own a ton of Apple. So when you look out into the future, the first thing we say is, does it fit our theme? So what are the themes of this decade? So the technology theme of this decade has become very clear. It's AI. It's taking databases and information we've been storing and gathering for the last decade and making it useful. This is wonderful. Okay, but everybody's got to upgrade their databases and their systems and train these computers how to become actually useful, because we have so much data that we don't use for any reason at all. And now all of a sudden there's a reason. So AI is going to drive enormous levels of innovation. I was in an interview the other day and they're like, is this thing played out? I was like, played out? It doesn't even work yet. I'm like, Bard is still wrong half the time. I don't know if you know that. Boy, you got to be careful with Bard. You're like, oh, it's AI, it's right. And then you're like, what's 5 plus 5? And it says 12. And you're like, no, Bard's got to learn math still. It's not good at math. So if you compare Bard to chat, they're different and they work differently. So there's so much more to this. Like, so when you think about a young person in 10 years, how smart are these computers going to be? It's going to be insane. But the productivity from this is massive. So I'm super excited, like, because the theme is so clear now. It's like taking a few years, the pandemic, it's like, what's the next thing? And now, boom, it's right there. Hits me on the head. We're big owners of NVIDIA, so it's been a huge profit for us this year on that alone. And we've owned NVIDIA forever, but NVIDIA's in a wonderful position, being the hardware of the brain cells of these computers. The second theme that we focus around is climate change, because now it has become not only imperative, but like we have major economic and real life issues due to climate. So Phoenix, Arizona, for example, had 110-degree weather for a record now like 60 days in a row or something. Now, like, I don't know if you've been to Phoenix. Oh, you're in Florida, so you get some of these really hot, humid
I grew up
days.
in Phoenix.
Oh, okay, there you go. So I've spent a lot of time in Phoenix, and I kind of like the hot days, and I go out and play golf. 110 doesn't bother me, But like 60 days in a row, you're like, all right. So, like, actually, one of my new investments is actually just an air conditioning company. They make these things called heat pumps and air conditioning units. And it's just like, how does air conditioning not do well over the next decade? It's like so hot. It's hot. Like, even like I live on the beach. It used to be like, like I had no air conditioning. I just bought a new air conditioning unit for my house because it's like you never needed it before, but now it's hot, So themes around climate. And then the third theme that we're really invested in is consumers, like what people do. So it's entertainment, sports, video games, cannabis, top brands, pet industry. So we look at like where are consumers spending their money. Like one of our biggest investments is in Vegas, at the MGM hotels, which is having a very tough week. But like, I love Vegas. They got killed in the pandemic. We bought MGM stock at like $10 during the pandemic. It's back up to 40, but we still love it right now. Between online gambling, the end of COVID, the conventions are back, sports, the sphere. Like kids today, like their favorite thing to do is just get on their phone, do fantasy sports, watch NFL on multiple TVs with their buddies. I want to be in that business, and we're in it. Netflix and streaming is another theme of ours. And then top brands like Louis Vuitton is a stock of ours, and Nike and Lululemon we just added. So we look for companies in these main areas. We do have some that are outside of that, but in general, it's like, okay, these are the themes that are driving. So what are the companies really driving the innovation within those themes? And are they making more money? Because that's the bottom line. So one of the biggest differences between us and a lot of investors, especially young investors, is they don't really care about the financials and they don't care about fundamental analysis. So they see stocks going up and they'll buy them. Oh, I like SoFi, I'll buy SoFi. And they all buy SoFi. And it's like, okay, like, what do you know about SoFi? And it's like, oh, well, nothing. And I go, well, I can tell you why SoFi has an issue, and it's like, well, they can't make money. It's like, why can't they make money? Well, it costs them so much money to get each customer. See, I'm in that business, so how does SoFi get a client? They have to advertise. And how expensive is that? It costs them more money to get a client than the client makes them. That's been the case for SoFi since they started. Now, I like the company. It's beautiful products, blah, blah, blah. But if it costs you $1,000 to get a client that only makes you $500, is that a great business? It's like, no.
Right.
Well, that's SoFi's problem. So, you got to look at the business and understand, like, are they making more money? Like as much as I like Tesla right now, they're being pressured on margins. They have issues. Its stock is not cheap, On the other hand, you have NVIDIA where margins and profits are exploding and people go, oh, it's such an expensive stock. I go, you're looking at the past 4 quarters. You're not looking at the next 4 quarters. And the next 4 quarters, yeah, it's hard to believe how much they're growing. But if you actually look at that, NVIDIA's cheap. So in the next year, if NVIDIA executes their business plan, this stock could be, massively higher, if they do these numbers, because nobody believes them. It's like, it's too big. On the other hand, you got Tesla, where the expectations are very high, and they need to prove that they deserve this valuation. So, when you look at stocks, you have to look at the future, not the past, and that's how you determine valuation. And we try to find the leaders that are growing earnings, that are great companies with phenomenal management. So if I buy the stock, hopefully I never have to sell
it. Mm-hmm. Just the last question that I have, Ross. I think we only have like a minute to answer this one. So, the younger generation right now, financial literacy, I think is so important, and it's kind of getting more and more traction. And what do you think are some of the best ways that younger generation can learn about finances, like budgeting, investing, etc., and do it really in a way that they enjoy and that makes sense to them?
Well, that's also why my firm has a Get Invested program, because there's nothing like, that's how I'm wealthy, is because I started when I was a kid and I figured this out as a teenager and like forced myself to learn. Now, back then I had to go to the library and like read value line reports, and stuff like that. Like, it was hard to get information. Okay. Today you have the opposite. So today you can go online and there's just wonderful, from like blogs and people who are putting out great information, to books, and materials, to videos now. There's lots of people you can follow on YouTube who are good. I think the challenge now is finding good information versus information, because there's too much, So like, I think for young people, investing is a simple thing, and there's a lot of stuff written, but the truth is use your retirement plans at work, use index funds or growth funds, that are high quality, and don't overthink it. There's no real quick path to wealth other than focusing on your own career. Okay. But to expect the stock market to just create all this wealth for you without actually adding new capital is a false reality. The where you build wealth is by working and saving and investing your money every month. Okay. And if you do that, you can build a tremendous amount of wealth in 10 years. Okay. So if you're 25 and you just got your first job and you're out of school, like, the most important thing is sign up for your 401k, put it in a growth fund or S&P 500 index fund, or of course my fund too. And then, just add to it and just save your money. The saving part is the hard part. The investing part is actually easy. You just can buy almost the S&P. You see what I'm saying? But but the saving money is hard. So learn how to budget. Use some of the apps like Mint. There are a lot of apps now that help young people budget. This is a huge thing because you don't make a lot of money, but you also don't have a lot of expenses. You don't have kids to pay for, you don't have a house, so it's like you go, oh, I only make X amount of dollars. And I'm like, actually, this is the easiest time in your life to save. Okay. When you're my age and you've got two kids and you got a house that you're rebuilding and you got all these bills coming everywhere, it doesn't matter if you make $1 million a year. Yeah. I mean, by the time the government takes half and everything else, you're broke. Right. And so it's like, when you're young, this is the best time. But I just said it, and I'll leave you with this thought, is that if you can save in your 401k, let's say $5,000 to $10,000 a year, and you do that, like we were just talking, a friend of ours, a grandmother died. She was 95. And I said, boy, if people lived to 95, think about it. If you're 25, and I said this to the people in the office, I go, if you're 25 and you save $10,000 a year, okay, maybe you make $75,000 or $80,000 a year, you can save $10,000 a year, okay? You do that in your 401k till you're 95, compounded 70 years, and you just put in the S&P at 10%. Do that math. You're going to be so damn rich, you won't know what to do with the money. It's a huge number. It's massive.
Yeah.
So it's really just easy to be a multimillionaire if you're 25. So that's my advice. Time is the most powerful thing you have. This is the secret to my wealth. I started when I was 13. I was aggressively saving when I was 60. And when I was in college, I worked. I had a band. My parents gave me enough money to live, and I saved all the money I made working, and I invested it. Okay. And then when I graduated, I had no money. I had this 10 grand or whatever I had, and it helped me like pay my rent while I started my career. And then once I started making money, I just kept saving, But I say it all the time. If I can live to 95, man, I'm going to be a billionaire, So it's like time is the power, Time is your power. And if you waste your time, that's the crime. So don't spend so much time worrying about which stock to buy that's going to make you rich all of a sudden. Good luck with that, Spend your time working on your career, invest in your education, make a good income, stick with your career and your job, get skills, if you're in the construction business, electrical, there's so many jobs in huge demand now. And then save your money and invest it in good, solid, investments. When your friend pitches you a bunch of garbage, don't do it, and it works. And now 30 years into this business, I know it works. And we have thousands of clients, and it works every time. Time. It's the most
Yeah.
powerful asset.
A great lesson. Well, look, Ross, I appreciate you coming on. I think you have, a great story and you've done a lot of interesting things. And I wish you much success with what
Thank
you're
you.
going to do going forward. And I think this mission of empowering the youth to understand, financial literacy, I think it's so important. The way you're simplifying it is really a critical aspect of that because people find it overcomplicated. So, wishing you much success and appreciate it.
Thank you, Ben.